Hey everybody, welcome back to Broader Financial Future, aka BFF. Hopefully you're having an amazing day out there. Today I'm going to talk about one of my favorite subjects, and that's dividend stocks. So right now it's that time of year where I'm going through my portfolio to kind of rebalance. So today's topic is going to be about high paying REIT dividend stocks. You don't want to miss today's video, so stay tuned. Now, just a disclaimer, I'm not a financial advisor. This video is strictly for entertainment purposes only, and any investment may involve risks, so it's important that you do your own homework. In today's video, I'm going to be discussing 3 dividend REIT stocks, and I actually own all 3 of these stocks. So the first company on my list that I'm going to discuss, this one's a monthly paying dividend. So if you like monthly paying dividends, this is the one to kind of look out for, and that is AGNC Investment Corp, ticker AGNC. So if you watch my passive income videos, you probably see me talk about this dividend a lot. Today I'm going to kind of break it down a little bit more as far as the numbers, what I think about the company as a whole. And this one is in the mortgage real estate investment trust, the REIT space. Now they have a PE for next year estimate of 6.8, which is pretty low, which I like. I like a low PE for a value. This year the estimate is 6.2, and their trailing 12 months was 3.1. Last year was definitely a bad year for them, so we got it when it dropped with basically a lot of other stocks. We got a really good deal. Now they do pay a monthly dividend of 12 cents per share, and their dividend yield is 8.53% currently, which is a high dividend yield. So you're looking for high dividends, a high dividend yield, which is a monthly payer. This is one to definitely consider. Their trailing month payout ratio was 26.04%. Dividend payout percent for the last quarter was 23.05%, which is really good. So the dividend payout ratio has been very low. Now, when you look at the dividend growth rate for the past year, is 0 because they actually lowered their dividends. So it's actually lower than what it used to be last year. In addition, that's the reason why it's actually at a negative. If you look at the 5-year growth rate, a negative 9.71%. I believe when I started buying this particular stock, the dividend was closer to like the 16, 18 cents per share a month. So that definitely dropped quite a bit. So that's something to consider with this particular company. They have 0 dividend growth history. Typically, I like to buy a dividend stock that has a positive dividend growth history, but they have continued to pay out their dividend. So that's something to be aware of as well. When you look at their market capitalization, it's $8.9 billion. So they have a nice sized company. Their operating margins for the trailing 12 months is 95.74%. These are other numbers. It's kind of like I like to look at to kind of see where the company is at. Another key matrix I like to look at is their revenue growth. If you look at their trailing 12 month versus the prior trailing 12 months is actually negative at negative 36%, but the revenue growth for the past 5 years is 28.62%. Now, when I look at the current price of $16.87, I think it's a decent price when you look at the 50-day moving average. So it's definitely trading at a discount if you look at the 50-day moving average. In addition to the 200-day moving average, it's just slightly below, but depending on when you're watching this video, give or take, it might be up or down the 200-day moving average. So it's been about flat overall as far as the stock recently. Give or take, it has fluctuated a little bit. And when you look at the 52-week low and high, it was trading at almost $12 per share and all the way up to almost $19 per share. So it's definitely higher than the 52-week low, but it's definitely below its 52-week high as well. So you're getting somewhat of a discount currently with this particular company at its current price. Yahoo has a price target, if you believe in their price target, at $18.15, so it's trading at a little bit of a discount. Also, You look at Zacks Investments Research, they have it as neutral. And also, if you look at Veris, they have it as a buy. So depending on which companies like to look at, there is some buying opportunities here. This is more so for cash flow. There's not a lot of growth in this particular stock, but you're looking for alternate compared to like a savings account or a CD. This might be a place that you might want to park some of your cash just for the dividends. And that's what I'm doing with this particular company here. Is really just kind of parking some of my money really just for the overall cash flow. Now the next company on my list that I actually own is New Residential Investment Corp. Same thing. This is in the REIT space. REITs. My tongue is definitely tied. I definitely can't speak today. It's in the REIT space, and very similar when you look at the PE. When you look at the next year estimate at 6.1, has a 6.1 estimate. So very similar, a little bit lower. Look at this year's a little bit higher at 7.5, and then the trailing 12 months 10.6. So overall, their PE has been a little bit higher than AGNC, but looking forward, it looks like their PE ratio is going to drop somewhat. Now this one is a quarterly pays a dividend every quarter. So you're not, if you don't want dividends every month, this one pays every quarter. It pays 20 cents per share, and it pays a healthy 7.68% per share. So this is a nice way to kind of get into real estate without actually owning real estate yourself. Now their dividend payout ratio is kind of high at 81.63%, but when you look at the payout ratio, payout percent for the last quarter, it drops to 35.05%. So it looks like it's starting to trend down when it comes to their dividend payout. Now, this is an interesting one because their dividend growth rate is 100%, but they actually lowered their dividends. So that's why we look at their dividend growth rate for the 5 years average is lower, because when I initially bought this company, the dividend was like about 25 cents to 50 cents per share. And they definitely took a hit last year and they dropped it dramatically. But ever since then, they've continued to increase their dividend basically almost every quarter. So it's at 20 cents now. So that's why you see the 100% increase for the year, because they've been steadily increasing the dividend since that cut. So even though they cut their dividend initially, they still paid the dividend. They still paid something compared to like a Ford, where they completely cut their dividend last year, and also Disney. I was actually shocked about Disney because Disney's such a huge company, but you know, a lot of companies did what they have to do to survive, and cutting and suspending their dividends is something they had to do. I rather prefer a company to cut their dividend instead of just getting rid of it or suspending it overall. At least it shows me that they're somewhat committed. You know, it's like having a tenant paying rent. Yeah, they might not pay everything, but at least they can commit to something. I'd rather have a tenant pay me some rent than nothing at all, like Disney and Ford. But specifically Ford. Disney at least brought you a lot of value when it came to the actual stock price. So that was a good thing when it came to Disney. But also, this is actually, when you look at the market capitalization, this is actually a little bit of a smaller company than AGNC at 4.3 billion market cap. This gives you, lets you know the size of the company. Also, when you look at some of the operating margin, it's a little bit lower at 57.13%. But another number I like to look at is the revenue growth. And if you compare that to AGNC, this one is actually up the trailing 12 month versus the prior trailing 12 months, 175%. So they actually did a really good job refocusing their business last year. In addition to that, now the revenue growth for the 5-year period is definitely lower at 0.45%. But this is a company that is definitely smaller in that aspect. in market capitalization. So AGNC is almost 2 times as big as NRZ. Now another price. These are some numbers I like to look at to kind of see what is a good entry price. Now, the stock is trading at $10.34, depending on when you're watching it, give or take. So it's trading below its 50-day moving average of $10.64, and it's trading slightly below or at its 200-day moving average of $10.38. So this stock has been somewhat flat in the last 200 days. It is also, when you look at their low and high, it's trading almost at its 52-week high of $11.48. And Yahoo has a price target of $12.44. This is a company that I own as well, and this is a company I plan on holding, possibly adding some small shares here and there, but overall, I'm just going to really maintain my position. They do have a solid dividend. And if you look at Zacks Investments Research, they have it as a neutral, and Preventative has it as a buy. So Preventative have AGNC and NRZ as buy. So there's also some potential with both of these individual dividend stocks. And they also provide a high dividend yield currently. So it's above 5%. It's definitely killing a lot of companies out there when it comes to dividend yields. So you like high dividend yields, high dividend payouts. These are 2 companies to consider. Now, last but not least, this is actually my favorite REIT company. I did a solo video about this as well, and it's Medical Properties Trust, ticker MPW. This is in the REIT space, specifically equity, basically same in a REIT space as the rest. Now, some of the key things about this particular REIT. Now, so when you look at some of the numbers here, their PE is actually 15.5 for next year estimate. So it's definitely higher than AGNC and NRZ. Also, when you look at this year's PE at 16.5 and the trailing 12 months at 21.8. So this one, they're definitely trading at a higher value when you look at their PE ratio, but at least it's starting to come down this year and next year compared to what it was for the trailing 12 months. So it looks like the price is starting to come down a bit, which is key, and that's probably something I'm going to pick up more shares in this. Even though I'm paying a little bit more of a premium, I really like this company. Now, this company pays 28 cents per share every quarter. So like NRZ, it's a quarterly paying dividend. Now, its yield percent is definitely the lowest out of the 3 at 5.48% or 5.46%. That's way more than a lot of companies out there. A lot of companies at Johnson & Johnson is under 3%. So you got a lot of companies between like 3 to 4 to 5. This is a company that's high up there. So all these companies that I'm mentioning today, their dividend has a valuation of over 5% each. So each one of these companies has a high dividend yield. When you look at the trailing 12 months payout ratio, it was actually pretty high at 119%. But when you look at the payout ratio for the last quarter, it dropped to 90.36%. So one thing is the payout ratio is high compared to the other 2 companies, but unlike the other 2, their dividend growth rate for the 1-year period is 3.7%, and for the 5-year period, the average is about 4.01%. So this company is actually continuing to increase its dividend. So that's key there. So a lot of things. When I look at a dividend stock, I like to get a company that's increasing their dividend, and this is a company that's actually doing that. And when you look at the market cap, and that's one of the reasons why I'm willing to pay a little bit more of a premium to buy more of this company. And when you look at the market capitalization, It is the largest out of the three at $12 billion. So there's a lot of the market's high there. The operating margin is 67.34%. So lower than AGNC, but higher than NRZ. Also, when I look at the profit margin for the trailing 12 months, it's at, let's see here, 38.34%, which is actually still slightly above NRZ. Another key thing here is when you look at the revenue growth for the trailing 12 months versus the prior trailing 12 months is 36.27%, and the revenue growth for the 5-year period is 23.34%. So it's definitely, when you look at the 5-year chart, 5-year growth period, it's definitely the highest out of the three. AGNC is 28.62%, but so it's still higher than all three. So that's another reason why I really like this company. The current price is $20.32, which is actually lower than the 50-day moving average and a 200-day moving average of $20.88 and $21.41. So it's trading at a bit of a discount currently. Also, is below its 52-week high of $22.82. So it's a little bit at the top, close to the 52-week high, but it's not there. Yahoo has a price target of $23.63. So there is some room for some growth here. In addition to that, when you look at Zacks investments research, they have it at neutral. Actually, Zack has all three at neutral, but Preventative has this as a hold. So unlike AGNC and NRZ as a buy, they have this one as a hold. But for me personally, this is my favorite out of the three. I see a lot of potential with this company. They really focus on hospital and is a healthcare REIT. They recently brought some properties in Florida, which I think is going to definitely help out their portfolio, especially because that's a place people go to retire. Pretty sure people helping are going to be in the best shape as they age, and Florida is a great place to have those facilities. So I think that's a great thing that they're doing there. Overall, I just really love this company, man. They're doing like a lot of things right. Their portfolio of hospitals. The company has about 444 facilities and about 42,000 licensed beds in 9 countries. So they're not just US based, they're worldwide. So this is another reason why I really like MPW. And I really like the healthcare space that they focus in. I think that's very key compared to the other two. And are hyper focused in that aspect. I like the fact that they're committed to their dividend. Even though their dividend yield is not as high as NRZ and AGNC, they've shown, at least within the 5-year period, that they're willing to maintain and increase their dividend, which I think is very important. And also those new properties that they purchased will help increase their revenue. So I think that's a good thing, which will help them continue to pay out their dividend. So those are my top 3 REITs that I have in my portfolio. Let me know, what REITs do you actually own? What are some of your favorite REITs? Do you own AGNC, NRZ, or MPW? Let me know your thoughts below. And make sure you hit that like button and subscribe. It really helps out the channel. Help us get to 500 subscribers. And until next time, everybody, I talk about finance, index funds, all things finance, from stimulus checks to ETFs to growth stocks. So that's pretty much it, man. Let me know what topics you'd like me to talk about next. Until next time, everybody, have a good one. Peace.